All right, ladies and gentlemen, Palantir just reported earnings. We're going to breeze through this quarterly report. We're going to go where my models are versus what they're reporting, making sure everything lines up here. If you're new to the channel, I did recommend buying the stock around $6 or $7. It did hit those levels, and you've made a tremendous amount of money. Biggest concern I personally have with the stock is that it's been a lot about multiple expansion and a lot of excitement about AI and contracts that they've been getting. Not really a true fundamental backing that comes behind it quite yet. That doesn't mean that it can't happen, but it just seems like it's been more about multiple expansion and it's pulled a lot of earnings forward in my opinion. But we're going to breeze through these earnings, take a look at where the stock's trading and give my 2 cents and make sure that my model's lining up with everything they're telling us to get an idea where fair market value is at getting a double-digit rate of return for Palantir. So hopefully you guys enjoy. We take a fundamental approach on this channel. We don't get excited about the news. We don't get excited about the hype. We really try to let numbers dictate where the stock is going and where a good entry point is. It's not a perfect science, but it's something that we can consistently do with some sort of accuracy. So U.S. commercial revenue growth of 40% is really ridiculous. You don't see a lot of companies still growing 40%, especially when the type of numbers that Palantir is doing, and 14% quarter over quarter to $150 million of it being commercial, U.S. commercial revenue. Now, what I want to highlight here is the fact that revenue is growing 21% and 4% quarter over quarter. And just so you guys see we're all on the same page here, I basically had a 2030 price target of Palantir between $23 to $30 a share is where I thought the stock should be trading around 2030, and it's already currently trading at those levels. So this is the biggest concern I have with the company. My 2024 earning projections was going to be right around $2.8 billion of revenue at 25% revenue growth. So we're going to sift through this and make sure that all my numbers are making sense with what they're reporting here. The positives, there's definitely a lot of positive of what's going on here with Palantir. They're growing operating income for the sixth consecutive quarter of GAAP profitability with 17% margin. Adjusted free cash flow coming in at $149 million at 23% margins, and GAAP EPS of 4 cents with adjusted coming in at 8 cents. And I really want people just to take a breath here and think about this. This is a company trading over $50 billion market cap, but is earning roughly 4 cents a quarter, okay? So I just want to keep that in perspective so we don't get too excited about the earnings here. Now, a lot of the promotional things I will look at later, but I'm mainly focused on the financials specifically, so that's going to be where my focus is for the company. And so GAAP operating income is on a nice trajectory here. And the nice thing is about Palantir is they're giving us full year guidance here. So for the next quarter, they're expected to do $649 million to $653 million, with adjusted operating income coming in around $209 to $213. And then when you move this over to go look at full year expectations, we're call it $2.7 billion. And so when I pull up my expectations, and I did this chart a while ago, they're definitely still on pace, doing really good growth. But as you guys can see here, I actually had them doing right around $2.8 billion of top line revenue. So they're actually coming in a little bit light from my expectations of that 25% revenue growth. And then I knew it was going to slow down in 2025 and beyond, doing probably closer to 20 to 19% revenue growth. So I'm actually going to leave everything as is because I got a feeling they're probably going to beat expectations. So I do still think that they're on pace to achieve these types of numbers. And when we bring it down to adjusted free cash flow, it's looking like those margins are actually compressing pretty strong here, going from 36% margins down to 23%. Which is a little bit of a concern here when you're putting the kind of multiple that's on Palantir. Obviously, there's some good things that we're seeing here with Palantir, but there is some question marks I do have here. And the first question mark is going to be that that stock-based compensation is still heading in an upward direction. I thought that this was going to be something that slowed down for Palantir. And the other thing is they have 2.2 billion shares outstanding in 2023, now jumping up to 2.4 billion shares outstanding. And from a GAAP basis, you're earning 4 cents. Now on adjusted basis, they're earning 8 cents. And so this dilution seems to be still a problem here. And I thought there was going to be buybacks to actually nullify this dilution that was taking place. And so I'm a little confused about the amount of shares still available out in the market. Let's see where I have them at. And so you guys can see here that I was expecting about 2.2 billion shares outstanding, and it's actually 2.4 billion outstanding. So I'm going to increase the share count a little bit here. So a few things I want to talk through when it comes down to Palantir here. Number one, I'm still going to keep my $9 to $10 price target in line with a 2030 price target of roughly $25 to $30. that's still going to stay intact. As I started plugging in numbers, everything still looks to be on pace. So I do think that returns are going to diminish as we're looking at kind of what the company's doing, for two reasons. Number one is revenue growth did come in around 21%, which is very, very impressive. But when we factor in that they added nearly 180 million more shares to the market, which is about a 6% increase of shares to the market, that's really watering down that true revenue growth by bringing that 21% probably closer down to 14 or 15% revenue growth and just true growth as a shareholder. So when you're looking at holding on to this stock and you're looking at the amount of dilution still taking place here, I do think it's a little bit of a concern at diminished returns going forward because of how much has been pulled forward in a very short period of time. When we look at kind of the run up in the stock and what it's trading for, you have a $56 billion market cap on a company that's earning you about 4 to 5 cents a quarter from a gap perspective. But I want to talk about the run up of where I thought it was a good price target. So when we hit these price targets down here, I definitely thought Palantir was a good buy. And then you've had this big pull, this big move forward here of an upward direction of $25 a share. And this is where I thought it was extremely frothy. Now, we'll see what happens tomorrow. There is a huge following with this company. There's a huge following with this stock. And there's a tremendous amount of buyers still interested in this company. And even now, Wall Street's getting more and more interested in Palantir. But at what cost? That's really the question. And for me, I still think this is a very, very expensive stock. As you guys can see here, I had to readjust my earnings projections down where I thought they were going to earn about $2.8 billion. They're earning closer to $2.7 billion. Not a huge deal, but it is a discount considering that I was expecting them to kind of beat these types of numbers. Then number two, we have to factor in the amount of dilution. I thought they'd have around 2.2 billion shares outstanding. It's all the way up to 2.4 billion shares outstanding, which once again, I have to factor into my analysis. So when I factor in how much this company is growing, and they're guiding for a little bit slower growth going forward, but yet there's still a lot of shares out on this market, I do think that $9 to $10 price target still makes a lot of sense if you're looking for an above average rate of return. Where it's currently trading, could it go to $25, $30? Absolutely could do so. But my biggest concern is when it does correct, it could be a substantial correction that takes place here. At some point in time, the fundamentals will eventually matter because stock price usually follows earnings. With what's been taking place here, the earnings haven't really been growing all that much. And so we're looking at a company earning 4 to 5 cents a quarter on a gap basis, maybe 15, 20 cents a year, trading at 280 times earnings and a $56 billion market cap. To me, seems very, very rich. It's definitely a game that I'm not interested in playing at these levels. I think if it got back down somehow to $9 to $12 a share, you could start looking at this company as having some accelerated returns in the future. But because of where it's currently trading, I just think it's not a huge upside from these levels. Of course, it could go up to $30. But I would say at these levels, I think the downside risk is definitely in question here. As always, ladies and gentlemen, really appreciate your time. Thank you so much for spending it with me, and we will see you in the next one.